If you are running a small business or thinking about starting one, you may be wondering if you should be operating as a limited company or as a sole trader. Well, stay tuned to find out what setup is right for you. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. Today we'd like to discuss the question, should I be trading as a limited company or a sole trader? This is something most startups and small business owners have trouble deciding. However, it's something that is best to get right from the outset, as choosing the wrong setup could have serious consequences in the future. We are going to clearly define each business structure. That is, what is a sole trader and what is a limited company. We'll then walk you through the merits of both setups to help you decide which one is right for you. Okay, let's get started with what is a sole trader. A sole trader is a self-employed person who owns and operates their business as an individual rather than through a recognized business structure such as a limited company or a partnership. As a sole trader, there is no legal distinction between the individual and their business entity. They are personally liable for all of their business debt. While a sole trader runs their business on their own, it doesn't necessarily mean that they need to be alone in the business. A sole trader can employ staff on a permanent or part-time basis. Now let's take a look at the advantage of trading as a sole trader. Number one is simplicity. As a sole trader, there is no need to deal with the formality and documentation involved with setting up a limited company or partnership. You can start doing business straight away without even needing to choose a business name or set up a business bank account. Number two, a sole trader is free to set up. There's no cost involved in starting a business as a sole trader. Although the cost of setting up a limited company is minimal, there's no cost whatsoever with commencing as a sole trader. Number three, there is less administration and reporting. As a sole trader, there is no need to generate any annual business reports or make annual filings to Companies House, for example, confirmation statements or annual accounts. The only paperwork that needs to be submitted is the self-assessment tax return. The cost of a small limited company's annual filings can range from £800 to £1,300 if an accountant is used to prepare the annual accounts for submission to Companies House and HMRC. This cost is generally thought of as the main disadvantage of operating as a limited company. Number four is confidentiality. Sole traders have much more privacy in terms of their business dealings compared to limited companies. There's no need to publish an office address or provide details of people with significant control over the business. Also, financials are not on the public record and generally only need to be divulged for the purposes of completing the annual self-assessment tax return. Number five, there are no director duties. Sole traders are subject to or not subject to any of the requirements under the Companies Act 2006. In particular, they don't need to follow Chapter 2 of the Companies Act, which specifies the general duties of the directors. For example, the duty to exercise reasonable care, skill and diligence. Because sole traders do not have to consider any shareholders, they are not required or regulated in their actions and are therefore more at liberty to take financial risks. Conversely, if a company director makes a very risky business decision, this could contravene their director's duties under the legislation. And lastly, number six is flexibility. Sole traders can convert to a limited company relatively easy and quickly if they decide to adopt an official business structure. There's also no paperwork involved with ending the business as a sole trader, whereas closing a limited company is more difficult. So now let's turn our attention to the limited company structure. And we'll start again with a definition. What is a limited company? So a limited company is an incorporated business that can be limited by shares or by guarantee. For the purposes of this video, we're going to focus on the most popular type, which is companies limited by shares, as they are the entities used for general trading. But what exactly do we mean by the statement, a limited company is an incorporated business? Let's break it down. A limited company means there is a limit to the financial liability of the shareholders to the value of their investment. So unlike sole traders and partnerships, the owners of limited companies are generally not personally liable for the debt of the organisation. An incorporated business means that the company has its own legal personality. Since it's a legal entity in its own right, the business, rather than its owners, can enter into contracts and be held accountable for any liabilities. Limited companies must be registered with Companies House, and the details will then appear on the public register. There are various rules and regulations that limited companies must adhere to, most of which are set out in the Companies Act 2006. Now let's consider the advantages of trading as a limited company. Number one is personal liability. Shareholders of a limited company are not personally liable for the business debt. However, there is no limit on a sole trader's liability if the business gets into financial difficulty. Any debts owed to the creditors will need to be paid out of personal assets if there is insufficient money in the business. This can extend to property, including their own home, and can result in personal bankruptcy. The unlimited liability of being a sole trader can be a huge risk for anyone with extensive personal assets. It may even be possible to prevent business expansion by those who are not or more risk averse. Number two is marketing and credibility. Some people prefer to deal with limited companies as sole traders and they're often more considered higher risk or less professional. The perception is possibly due to a sole trader's unregistered status, as all established and large businesses trade as limited companies. In business terms, people trust big businesses as they feel they have the resources, infrastructure, and willingness to fix things should something go wrong while supplying the products or services. Indeed, this problem is magnified in the business-to-business sector, where most large companies have a policy of only dealing with other incorporated entities. Number three, raising capital. It's generally easier to raise capital as a limited company, whereas sole traders can struggle with this since they don't have to submit annual accounts. This reduced financial transparency can also reduce their ability to get bank loans. The same applies to attracting potential investors. Limited companies have the upper hand here, as investors can be offered shares in the business, whereas with a sole trader business, this is just not possible. So even if a sole trader is doing exceptionally well, they don't have the option of raising substantial capital. For example, by inviting new shareholders to invest in the company. Number four is tax efficiency. Limited companies are generally more tax efficient in that money can be taken out of the business by a combination of salary and dividends. And profits can be retained in the business to reduce personal tax liabilities. On the other hand, sole traders are required to pay personal tax on the full extent of the profits each year. They are unable to reinvest their profits in the business through retained profits as a limited company can do. And they do not have access to the associated lower tax rates of corporation tax. Furthermore, sole traders do not have the option of paying themselves with a combination of salary and dividends, and therefore do not have the tax efficiency afforded to shareholders of a limited company. Number five is the ability to transfer business ownership by sale or succession. It's much easier to transfer ownership of a limited company than an unregistered entity. Ownership of limited companies can easily be sold or passed on to family members by transferring the shares. And this will include everything, including clients, equipment, and premises. However, sole trader businesses cannot be seamlessly transferred from one party or a successor. Furthermore, when a sole trader dies, their business effectively dies with them. Whereas with a limited company, as long as there is one director and shareholder in place, the company will continue to exist. Number six, business name protection. A limited company name is registered at Companies House, which means no one can register the same name or one that is deemed to be too similar to it. Many people set up a limited company solely for the purpose of protecting their business name. On the other hand, a sole trader's business name has limited protection, and generally anyone can set up a business and start trading using the same name. The only protection open to an unregistered entity is the law of passing off, which is complicated and often unsatisfactory. In other words, it is not easy to prove the intention that someone is trying to steal your goodwill. First Formations offers a reserve a company name package at a cost of $59.99 plus VAT. This package includes limited company formation, registered office, confirmation statement, and dormant company accounts filing services. So now that we have dealt with the pros and the cons of trading as a sole trader and a limited company, what if a sole trader wants to switch to operating as a limited company? Is this allowed? The answer is yes. Many sole traders decide to convert their business structure to a limited company once they reach a certain point. For example, their annual turnover reaches a specific level, or they wish to expand the business without increasing their personal risk. The first step of this process is to register a limited company. This can be done from as little as $12.99 with First Formations. A good place to start is on our homepage, where you can check if your desired company name is available. The application process takes about 15 minutes, and once complete, your new company should be approved by Companies House and ready to trade in 3 to 6 working hours. As well as registering the company, there are a number of other things that need to be done. So here is a short checklist of the tasks involved in converting from a sole trader to a limited company. Number 1, register a limited company at Companies House. 2, inform HMRC that you have decided to stop being a sole trader. 3, transfer your sole trader business and business assets to the limited company. Number 4, set up a business bank account in your limited company name. 5, notify stakeholders about the change of business structure. And 6, register your limited company for corporation tax and PAYE. We would also recommend checking out the First Formations article explaining the process in more detail. The title is How to Convert from a Sole Trader to a Limited Company, and is available in the blog section of our website. So there you have it. We have covered the merits of both business structures and discussed how to convert to a limited company. Just what setup is right for you is a decision only you can make. However, as decisions go, it's a big one. So it's worth taking your time to carefully consider it. If you have any questions, please leave them in the comments section below, and we'll get straight back to you. In the meantime, be sure to subscribe to our channel to get more advice and tips on limited companies, reporting requirements, and tax obligations. We're always happy to hear from you, and we can't wait to help. Until next time, cheerio.